Thank you. Good afternoon and a warm welcome to all the parts to the post-results investor and analyst meet of Shaily Engineering Plastics. I hope you're all keeping safe and healthy. I have with me Mr. Sanjay Shah, our Chief Strategy Officer, and SGA, our Investor Relations Advisors. I hope you've had a look at our investor presentation that is uploaded on our website, as well as the stock exchange. I'm happy to share that we registered our best quarterly revenue in Q2FY22. This is on back of improved traction seen across segments and ramp up in projects. The visibility we have across various businesses gives immense confidence that we will be able to scale up further and grow. During September, we commenced commercial operations at our new plastics facility in Halol, and we expect further ramp up in production over the coming quarters. I'd like to mention our healthcare business, especially pen business, and say that it has potential of doubling the volumes from current level in a span of the next 2 to 5 years. Similarly, in toys business, our clients have planned to source significantly from India, and we have limitless opportunity to grow with that. We remain very optimistic on growth going forward. Previous year, same quarter, we had made an announcement that we have established a new wholly owned subsidiary, Shaily UK, with the sole purpose of creating leading technologies across the pharma business segment that can be licensed to our customers either directly or through product manufacture and supply. The second wave of COVID led to extension of travel restrictions and caused delays in setting up the subsidiary. Today, we have successfully set up our design and research center in the UK and look forward to expanding our brand with this subsidiary. I'm happy to share with all of you that the board has approved an investment of up to £1 million in Shaily UK. This is in addition to the investment of £200,000 made by the company towards equity share capital previously. We have concluded the fundraise announced in August 2021. We will deploy the funds to capitalize on large opportunities we see within most of our businesses. We have a clear vision of next 18 to 24 months in which we would like to utilize our funds strategically in various parts of our business. That is all from my side. I shall now hand over the call to Mr. Sanjay Shah, our Chief Strategy Officer, to give you the operating and financial highlights for quarter 1 of FY20, quarter 2 of FY22.
Thank you, Amit. Good afternoon, everyone. I'll be sharing with you the highlights of our operational and financial performance of Q2 and H1 FY22, following which we will be happy to respond to your questions. During the quarter, we processed 4,490 tons as against 3,986 tons in Q2 FY21. In Q1 FY22, we processed 4,093 tons of polymer. For H1 FY22, we processed a total of 8,591 tons of polymers as against 5,801 tons in H1 FY21. Machine utilization rates were 69% in Q2 FY22 as similar to Q2 FY21. We have added a lot of machines in the intervening period in the last 1 year. Exports during H1 FY22 stood at 79% of total revenue as compared to 69% in the same period last year. I shall now brief you on the standalone result highlights. Revenue stood at 144.9 crores during Q2 FY21 as compared to 98.7 crores for the same period last year, marking a growth of 46.7%. In Q1 FY22, we booked revenue of 120 crores, marking Q-on-Q growth of 20.6%. On yearly basis, H1 FY22 revenue stood at 265 crores versus H1 FY21 revenue of 145.3 crores. Commencement of commercial supplies from the new plastics facility in Halol shall further boost up the revenue for the remaining part of the year. EBITDA for Q2 FY22 stood at 23.8 crores as compared to 17.7 crores in Q2 FY21 and 20.2 crores in Q1 FY22. EBITDA stood at 16.4% in Q2 FY22 as compared to 17.9% in Q2 FY21 and 16.8% in Q1 FY22. For H1 FY22, EBITDA stood at 44 crores with 16.6% EBITDA margin versus 21.1 crores in H1 FY21 with EBITDA margins of 14.6%. Net profit stood at 10.5 crores for Q2 FY22 versus 7.3 crores in Q2 FY21. Net profit stood at 18.5 crores versus 4.3 crores in HY21. Cash PAT for Q2 FY22 was reported at 16.9 crores as compared to 11.9 crores for the same period last year. For H1 FY22, cash PAT stood at 30.8 crores versus 13.4 crores in H1 FY21. Consolidated results include total assets of 1.92 crores as at 30th September 21 and total revenue of rupees 0 and total net loss of 0.1 crores from Shaily UK Limited, a wholly owned subsidiary of the company. Gross debt at the end of 30th September 2021, including working capital, stood at 257 crores. For the quarter, we incurred capex of 57 crores. We expect FY22 capex to be in the region of 80 to 100 crores. With this, I would like to summarize on the operational and let you know that we are working actively towards diversifying our business model, and you will see better trajectory in the quarters to come as we want to start ramping up. We'd also take this opportunity to wish all of you a very happy Diwali and a prosperous new year. That is all from our side. Now we can open the floor for Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Atul Kothari from Progwell Securities. Please go ahead.
Thank you so much for the opportunity. Sir, I have a few questions, especially on our UK business. Sir, I wanted to know, should we expect revenue from Shaily UK in FY22? And as and when the revenue starts flowing into our top line, can you explain as to what will be the nature of the revenue?
Yes, we expect revenue in FY22, and the nature of the revenue will primarily...
I'm sorry to interrupt you.
Amit, your voice is very faint.
No, I said we are expecting revenue in FY22 in Shaily UK, and the nature of our revenue is going to be primarily designed and one-time platform fee, as we call it, access to one-time platform fee.
Mm-hmm.
Okay. Sir, basically, what kind of investment are we doing in Shaily UK? So, is it basically on the technology front or on the R&D front, or are we setting up a new manufacturing facility?
Although we are not setting up a new manufacturing unit, what we are setting up is a design center.
Okay.
In terms of the investments, what we are making is basically in setting up the design center and everything, and we're looking at acquiring IPs and commercializing them. So that's what we would be doing there.
Okay, sir. Okay, sir. Thank you very much. That's all from my end.
Thank you. The next question is from the line of Pritesh Chheda from Lucky Investment. Please go ahead.
Yeah, hi sir. Congratulations on the improved traction. Sir, a couple of questions. One, with the improved traction, there is also an incrementally a case building up for value mix improvement or product mix improvement. yet the margins are lagging. So, some comments there. And when do you see, the margins also improving with the revenue traction or the value mix improvement?
So, Pritesh, there are a couple of things. When we look at margins, if you were to look at last 2 quarters or last 3 quarters, you have seen raw material prices being pretty high. And the raw material price change with our customers happen with a lag. So that lag effect is basically led to a reduction in the gross margins by about a little over 100 basis points. We expect the gross margins would be back to normalized levels before the end of the quarter. Second is, we are now seeing ramp up happening in the carbon steel facility, the steel furniture facility, and we're seeing ramp up happening in Q3 on the new plastics facility, which will basically lead to an overall reduction in the fixed cost, which would basically should lead to margin improvement as we move forward.
Okay. The carbon steel unit, it's now operational and running. I think it was operational running since quarter 4, right?
It was operational. We started the first product in December. We commercialized operations in December, and then quarter 4 and quarter 1 is when we basically commercialized all the products. And now we are going through a ramp up on that facility.
Okay. The other question is, now since half year has gone through, and we are at about 265 to 270 crore odd revenue that we have reported. And the past call also talked about continuous traction on a QoQ basis on the top line side.
Right.
What kind of top line do you foresee based on the projects under execution that you have for FY22? And specifically on the carbon steel project, which was expected to about, I think, 100 crore odd revenue, where would we be on that journey?
So, Pritesh, I think on the revenue front, we will still stick with the number which we have been communicating since the last 2 quarters. We see a revenue of about 550 to 600 crores in the current year. Carbon steel, 100 crores is what we would be looking at for FY23.
Okay. Thank you very much. If I have more questions, I'll come back. I wish you happy Diwali and happy New Year. Thank you.
Same to you, Pritesh. Thanks.
Thank you. The next question is from the line of Ritesh Shah from Investec. Please go ahead.
Ashwati, my first question is for Sanjay Bhai. Sanjay Bhai, what should one make of working capital days? Inventory days have increased, and overall cash conversion has actually increased significantly. I think in the last quarter you had indicated that there was a built-up on back of the orders on the toys side. So any related update to toys segment as well would be quite useful. Thanks.
Working capital days, Pritesh, if you want to look at it, while there has been a slight build-up on working capital days, as we move forward between quarter 3 and quarter 4, you would see improvement in working capital days. So working capital days on a net level should start coming down. We continue to basically execute the orders which we have taken on. So on the toys front, on a couple of projects, we have seen full ramp up happening. So on that businesses, we have basically, if you were to look at it on an individual basis, we have got back to normalized levels. But the other two or three other projects where we're still at the project stage, and we should basically be completing or starting supplies in Q3 and Q4. So it will take us some time to get back to normalized levels in working capital on those 2 projects.
So would it be possible for you to quantify incremental numbers on toys? I think we had initial orders of around $7-8 million. Has there been a further build-up on that? Have you already started shipments to the vendors and toys?
So we have started shipments since quarter 1 and quarter 2. So quarter 1 includes shipments for toys, and quarter 2 also includes shipments for toys. I think for the current year we will still remain in the range of $7 to $8 million And we are now looking at building up the pipeline for next year, which we think should probably be higher than that.
Sure. And are there any other companies that we have approached when we can actually increase our vendor base from 2 to more? That's also something that we had indicated earlier as part of our strategy.
So Ritesh, we are in discussions with 2 or 3 other customers, but it's still at an initial stage. The first product which we have supplied is just out in the market, so we should be getting a much better visibility once people start buying that product. Incidentally, it's a global launch of that toy from Shaily. So, and it's a pretty prestigious product, so we expect that there would be good visibility for Shaily for that. And you should see traction as we move forward.
That's encouraging to hear. And other question is anything specific that you'd like to add on the pharma side, devices, any global launches, or how should one look at the pipeline, or how are we looking to monetize it probably this year and next year? If you can provide some color and numbers over here would be great.
I'll let probably Amit answer that. Amit, you want to take that?
Sure. So we are currently working on a couple of new molecules. We're working on an auto-injector for semaglutide. We have just acquired IP on this product, and we'll be developing it in Shaily UK as our first official project.
Okay.
In terms of revenue, we're seeing we're hoping for approval on teriparatide in the U.S. market with one of our customers, which means that we will be able to start making commercial supplies as early as I would say between half of calendar 22 and the last quarter of calendar 22. We anticipate similar traction also on our pens that have been supplied for liraglutide, because these are almost launch on approval products. So we anticipate supplies to start between end of 22 and middle of 23 for both these products. We're looking at initial volumes of 150,000 on teriparatide and close to 1 million on liraglutide.
And the pipeline looks good, right? From an execution as well as launch standpoint. The reason I ask is I think earlier we had indicated that pharma could be as big as home furnishing by say FY24 or FY25. So it's difficult to understand the molecules.
Ritesh, we have not said that. What we have said is over the next 3 to 5 years, pharma would basically grow at a level between 2 to 3x from the current level. Yeah. So that's what you have said. Just to correct that out.
Right. So
and that still looks very, very promising. So yeah. I don't think we'll change the indication on that, because we do anticipate 2 to 3 times growth on pharma over the next 3 to 4 years.
That helps. That helps. Thank you so much.
Thanks, Ritesh. Wish you a happy Diwali.
Thank you, sir.
Happy Diwali.
Thank you. Thanks, Ahmad.
Thank you. A reminder to the participants to ask a question, please press star and 1. The next question is from the line of Hitesh Tong from ICICI Direct. Please go ahead.
Hello, sir. Thank you for the opportunity. Sir, I have 2 questions. The one is we have seen a good traction from the export business. If you see the export revenue, the contribution from the export revenue has increased significantly, of around 70 to 79% in this first half of FY22. Just wanted to know whether this contribution is largely increased from that Swedish furnishing measure, or is it some other products which are driving this export? The first one is this, and the second one is, sir, if you I just want to know some update on a RoDTEP front, which is export incentive program, whether this is beneficial for us or not. These are the two questions from me.
Hitesh, on the export front, the growth is coming in from multiple segments. One is in Swedish home furnishings customer as well as on the toys. So, quarter two we did a major ramp up on toys, which saw increase in revenue. So you've seen ramp up or overall exports as a percentage of revenue going up on account of that. On ROTDEP, unfortunately till date, EOUs are not covered under ROTDEP benefits. So while the government has been making noises, it will get covered from 1st of April. We don't see clarity in terms of how and at what rates they will be covered. So I don't think it will be right for me to comment on that. Once we see some clarity from the government on this in terms of how EOUs would get covered and under what rates, we would be able to comment on that.
Okay, so thank you very much, sir. I'll come in the queue and wish you very happy Diwali.
Thank you. Thank you, Hitesh. Wish you the same.
Thank you. The next question is from the line of Kaushal Shah from Dhanki Securities. Please go ahead.
Yeah, thank you, sir, for the opportunity. Sir, we had earlier read about capex plan for the next 2 years, FY23 as well as 24. So do we continue with that? I think it was in the region of around 200 crores, if I'm not mistaken. So do we continue with that plan, or we want to tweak it, given that there is higher traction both in pharmaceutical and in toys now? And the second question was on the pharma segment specifically. I think again had indicated that there were some commercial opportunities likely in the next calendar year, CY22. So that also remains on track?
I'll let probably Amit answer the second part of the question and then come to the first part of it later on. Amit, you want to talk about the pharma?
Yeah, the voice was very faint. Do you mind repeating the question, please?
Yes. So I think in the earlier call we had indicated about some commercialization happening for I think a pharma device or molecule, I think in the next year, and which would lead to ramp up in volumes. So in an earlier question, I think you did indicate about incremental volumes coming through in the next year. So that was related to that particular molecule which is going to get commercialized in CY22.
Yes. Kaushal.
Okay, got it. And
So Kaushal, on the capex plan, I think we are still looking at about broadly, if we were to break up the investments, we're looking at about 100 to 120 crores on the pharma part of the business, and balance about 80 to 100 crores on growing our non-pharma part of the business, which would basically mean toys, home furnishings, and other segments. So that's broadly what we are looking at currently. As we move forward, we see more opportunities coming up. We could probably revise that, but I don't see any. Based on current knowledge which we are looking at about 200 crores.
And this 200 will be spread over 2 years, FY23-24.
Right. Part of it, some of it will be done in FY22 also. So between now to the next 24 months is when we would basically be spending this amount.
Sure. That helps, sir, and best wishes for the new year.
Thank you very much and wish you the same. Thank you.
Thank you. The next question is from the line of Pritesh Chheda from Lucky Investment. Please go ahead.
So just clarifying on this capex. So initially you mentioned 60 crores have been spent for H1 FY22 and 80 to 100 crores is what is for FY22. And over and above that, there is 200 crores, or a part of this 200 crores is also a part of the FY22 number?
So part of the 200 crores is part of the FY22 number, Pritesh, and that's what I told Kaushal. What we spent from now till March will basically be part of the 200 crores which we are spending in. So
basically 150 crores kind of number comes in the next 2 years.
I would say about
200 crores.
If you were to look at from October 21 onwards, for the next 18 to 24 months, we will basically be spending 200 crores.
Okay, so 100 crore 100.
Yeah.
And
What we spent essentially last quarter was basically mainly on the new plastic facility which we set up in Halol. So over a large part of that amount was basically in the new plastic facility which we set up in Halol.
that was about, that is after the capex we did for the furniture.
The steel furniture facility. Yeah, the steel furniture facility. So this
after that we did this Halol plastic factory, right? How much did we spend there?
On the Halol plastics factory, we will end up spending a total of about 60 to 62 crores.
And at what asset turn?
It will be higher than the average asset turn.
Okay. And sir, lastly on that, the pharma side of the business, so on the pen side, we had certain products already on commercial supplies and certain new products to be added this year as well, and some to be added next year. Now, Amit did mention about the next year, the two molecules. But what is the progress on the existing supplies which we are doing, and a new molecule or a new platform which was supposed to get commercialized in 22 itself. So any progress there?
So besides 22, the commercialization of the molecule which was submitted back in 2019-20 is in progress. We're expecting approval over the next 6 months, which means commercial supplies will start in 22. On the other two molecules where we've made clinical supplies, we anticipate launch also towards the middle of 23 to beginning of 23 to the middle of 23, where we see substantial volumes ramping up. The other market that we have supplied into and we actually have open orders for is in the Middle East. So there have been quite substantial business development efforts, and we've seen the fruits of that effort. So we're in the middle of making supplies to the Middle East.
Okay.
This is all for our end. This is all for our platforms.
Yes.
Apart from that, I don't know if you've seen Sanofi have launched a product in India recently.
Yes.
A new, which is also made by us.
So okay. So I'll just conclude here. On the new commercial side, bulk of one of the platform we suppose. Hello.
Yeah, go ahead, Pradesh, we can hear you.
Yeah. So on the incremental supply side, one of the platform or one of the molecule is supposed to get commercial next year, and two molecules will get commercial year after next year, right? That's how it is.
Yes.
Okay. Thank you, sir.
Thanks, Pradesh.
Thank you. The next question is from the line of Akash Mehta from Kapal's Investment. Please go ahead.
Hi, good afternoon. Thank you for taking my question. I had a couple of questions. First, being on the operational efficiency front. Just wanted to know how much we've evolved over the past few years in terms of our operational efficiency. Are we reducing our dependency on the labor and getting technologically advanced, or we've changed our recruitment policy of people? If you can just throw some light on this area.
So, Akash, the new facility which we have set up for plastics is a fully automated facility. We would be putting up the video of that facility on our website shortly, I think probably before the end of November. I would suggest that you guys have a look at it. It will probably give you a sense in terms of the type of plants which we are setting up now.
Okay. I think that could be helpful going forward. And secondly, on the capital infusion and borrowing front, that's almost doubled since the March 21 level. So what will be the duration of converting these investments into the top line?
I lost your question in between, Akash. If you could please repeat.
So on the capital infusion and borrowing front, it's almost doubled since the March 21 levels. So what will be the duration approximately of converting this into the top line?
You're already seeing ramp up. So the capital fund raise which we have already done would be spent over the next 18 to 24 months as we talked about. So it will be gradual across different projects which we are talking about, and it will be over the next 18 to 24 months when we'll be spending that. The borrowings which have been done are basically for the new plastic plant which we have set up, which we have just commercialized by end of September. We are looking at ramping up as we move forward. So you should see ramp up in revenue between Q3 and Q4, which will basically
Q3 and Q4.
Right.
Okay. Yeah, I think that's it from my side. Thank you.
Thank you. Thanks, Akash.
Thank you. The next question is from the line of Aman Vij from Astute Investment Management. Please go ahead.
Good afternoon, sir. My first question is on the toys business. So, in the last few calls, you had indicated that our customers source like $80 to $100 million annually from India, and we are maybe like a single-digit wallet share as of now. So, the next 2-3 years, do you think we can become one of the main customer supplier to them? And maybe if you can talk about the largest current supplier from India, are they like 20-25% wallet share, or do you think these customers will always rely on 10-15 players rather than 2-3 big players?
The current largest player in India is a number which is what you talked about. It's a little higher than the number which you talked about. And there is possibility to get to that number over the next 3 to 5 years. We are working with these customers to see how we can increase number of products or number of SKUs which we do for them and increase the wallet share. So since we just launched the first product, I think both of us are understanding each other a little more better. We are also trying to understand this market a little more better. But I think we see enough opportunities on growing this business as we go into FY23 and FY24.
So, sir, to reach to the next level, do we think these 2-3 customers will be enough, or will we require a substantial addition of customers as well?
I think the numbers which we are talking about, we should be able to reach with 2 or 3 customers. But in toys, we would be looking at adding more customers as we move forward to basically build up scale.
Sure, sir. And you talked about, so we had achieved peak kind of run rate, I think in Q2 sometime. So any reason we are not scaling up faster? You have talked about similar run rate for the remaining quarters for this year only.
No, what we have said, what Amit mentioned in his speech was that we achieved our highest revenue in Q2 FY22. We have not said that that's the highest which we'll achieve, and we're not looking at going beyond that. So I think we'll see as we go on the numbers for Q3 and Q4, you should see a ramp up happening on that revenue.
Okay. That makes sense. The second set of questions is on the pharma business. First on the CRP caps, if you can talk about our utilization level and what we have heard, other players are also thinking about adding CRP caps in their portfolio. So is the competition increasing? What kind of opportunity is there for CRP cap for us?
So Aman, when we look at reporting utilization levels, we don't report utilization levels across a business segment or across a specific business. Most of our business or our capacities are fungible across different businesses and everything. So,
Sanjay, can I answer?
Yeah, I'm saying, yeah. Go ahead.
We're doing about on the caps. We're doing about 20 to 25% of our annual capacity, and the business is fairly steady. We add customers if we see a strategic fit, including on pricing, and that will continue. But there are no special efforts in general to ramp it up even substantially further. So while we have a capacity of manufacturing 100 million closures a year, most of that capacity is now being used for devices, which means that at the moment we do 20 to 25 million closures a year.
Sure, sir. And finally, on the pen side, you have indicated some numbers, 150K and 1 million for the two molecules over the next 2 years. So if we see, we are doing currently 6 million run rate annually, if my memory serves me right. So over next maybe 3 to 4 years, because 2 years all these products will get launched and they will take maybe 1 year to ramp up. So do we think from 6 million we can go to that, say, doubling of this volume? Or do you think the realizations are much higher, so we won't even require doubling of volume to achieve whatever targets we have in our pen business?
I think if we look at next year, if I look at the visibility for next year, that 6 is going to, close to 9.5 anyways. So I feel confident that in 2 years we will get to somewhere between 10 and 12 million pens. And of course, the realization is higher because they are our own platforms. So there is the money that we invested on creating IP, designing, developing is part of the revenue here. But having said that, I still feel doing 10 to 12 million in 2 years is going to be very possible.
Mr. Just one final clarification on this part. So you have talked about Sanofi's new pen, and we will be one of the supplier, if not the only supplier. So is this ramp up happening only because of the contract manufacturing part, or do you think the bulk of the doubling of, say, our pens capacity will be of our own IP pens also?
So far, the numbers you speak of so far, as we sit today, you will see that 80% of the volume comes from contract manufacturing. That will change to 60-40, maybe 55-45.
In the next 2 to 3 years, which you have indicated.
Yes, that's right.
Yeah, that's great to hear. Thank you. These were the questions.
Thank you. The next question is from the line of Ritesh Shah from Investec. Please go ahead.
Hi, sir. Just a follow-up question. We were scouting for a CEO for the firm. Any progress over here?
Sorry, Ritesh, we were scouting for?
We were looking to bolster the top management. Any progress on incremental management hiring at the top level?
Amit, what Ritesh is talking about is the replacement for CEO.
Yeah. I'll take this. No, we are. Look, I think we are still scouting. We've added a consultant this year, and really that's on the technical front. We're revamping the way we do injection molding. We're introducing a process through which it becomes more of a science than the art it is using the years of experience that we have. So we've hired an expat in that regard who is running our entire revamp on the technical side. But we still continue to. We've also hired a very senior fellow in procurement, but we still continue to look for that CEO to say. And I believe that over the next 12 months, we will be in place with one on board.
Sure, that helps. And my second question is, are we facing any challenges on the logistics side, be it containers or freight costing, etc., which could hamper the revenue numbers in the short term, or is it something which is pretty much okay on expected lines?
So Ritesh, logistics. Sorry, I mean okay. Go ahead.
No, go ahead, Sanjay bhai. We'll have the same answers. Go ahead.
Yeah. So Ritesh, logistics is a challenge. It would not be correct of me to say it's not a challenge. It's a challenge in terms of inbound as well as outbound. Revenue numbers which we achieved in Q2, we could have been higher if logistics issues were not there. But we're trying to find solutions to it. One area where we have an advantage is in most of our cases, our terms with customers are X works, so it helps us. But finally, the customer also looks at in terms of the freight cost which he is paying, and that does impact as we move forward. One of the reasons I think, I don't know whether you asked that question or somebody else asked that question, why do we have higher working capital? Yeah, you asked that question, working capital days. One of the reasons for higher working capital days, especially on raw materials and FG, SFG, is basically because looking at the logistics issues which we have on a lot of imported material, we would be increasing the sale or the increase safety stock. So that's one reason why you've seen a little higher working capital days. I expect things to improve in the next 6 to 9 months, and we should see some further improvement as we move forward. But yeah, it's a challenge right now.
Sure. And the last question, polymer prices have moved up significantly. I understand we operate more or less on a cost-plus basis. It will accrue probably with a lag. Is there some risk over here, or is it very much a normal status quo on our business terms with our partners? Assume.
Yeah, you're right. We will get with a lag. So some of it has happened, some of it will happen with a lag as we move forward.
Okay, perfect. Thank you so much.
Thanks, Videsh.
Thank you. The next question is from the line of Faisal Hawa from HG Hawa and Company. Please go ahead.
To me, this looks like a business, where the growth could be almost unlimited because, of our inherent advantages of, low cost and, having to really, being able to do a lot of this manufacturing quite easily. So what are our, ultimately, how do you see this going, year on year? Can we aim for a year-on-year growth of at least, 20% or 15% sales on a volume basis? And what would be the contribution of our top 5 customers to revenue?
So Faisal, what we have been saying is, if you on most of our calls, what we've been saying is, we should basically be looking at about 25% CAGR growth over the next 5 years, where yes, there will be some years or some quarters when we will have higher growth. There will be some years when we will have lower growth. But on a CAGR basis, that's what we would look at.
And what would be the contribution of the top 5 customers to our revenue?
So top 5 customers will account for about 80% plus of our revenue.
Thank you very much, sir. That answers.
Yeah.
Thank you. The next question is from the line of Kaushal Shah from Danke Securities. Please go ahead.
Yeah, thank you, sir, for the follow-up. Sir, if you can throw some more color on our Swedish client, we were going to add some more SKUs both on the carbon steel side as well as on the plastic side. So anything there incrementally?
So Kaushal, we just started a new facility called the furnishing major, where we would have added about close to about 16 of the top selling SKUs. And we just commercialized all of these in September.
This is on the plastic side?
This is on the plastic side.
Right, okay. Okay, and anything on the steel side?
Yeah, the steel side, we have already commercialized about 6 products where we are looking at ramp up. And once we get to the ramp up, we will look at adding more products afterwards.
Sure. Thanks. Thanks, sir.
Thank you. Participants, to ask a question, please press star and 1. As there are no further questions, I would now like to hand the conference over to Mr. Amit Sanghvi for closing comments.
Thank you everyone for joining the call. We hope we have been able to answer your questions adequately. For any further information, I request you to get in touch with SGA, our investor relations advisors. Thank you very much. Happy Diwali, Happy New Year, and stay safe.
Thank you. On behalf of Shaily Engineering Plastics Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.